Hey guys, AJ Hazy here, and welcome back to the Vantage Report. We are now halfway through 2021, so we've got a little extra content to share with you so you know exactly what's going on in the central real estate market. Now, there's a lot of people posting market stats these days, far more than when I began doing this. And like most things, we face information overload. We're long on data, but we're short on insight. So I'm gonna do my best to break down the stats, provide some context, and see if I can offer some wisdom. Okay, starting with sales. So far in 2021, we've had over 4,600 sales, with 2,500 of those happening in the last 90 days. These are record pace numbers, and we're potentially tracking towards 10,000 home sales in the central Okanagan for the first time ever. With an average transaction value of $775,000, up from $500,000 only a year ago, this means that there are a lot of dollars trading hands. That's $2 billion turned over in the economy in the last 90 days, and over $100 million in ancillary services and products from those sales that go to support local business. This and our red hot construction industry are two of the major drivers for the local economy right now. We've yet to see much of a summer slowdown as demand remains extremely high, and with travel bans now lifted, we are seeing lots of buyers from the lower mainland cashing out and moving up here for the relative affordability. Our next headline is luxury sales in the Okanagan, which continue to boom at record pace numbers. In the $2 million plus category, we've seen over a 400% increase in sales. And this is definitely fueled by people moving from the coast, trading a fairly underwhelming home there for a gorgeous home here. Of course, we're also seeing locals take advantage of low interest rates and their windfall of equity in their current homes, and they're trading up. Speaking of interest rates, let's hear from our resident Viking mortgage correspondent, Eric Norcott. What's going on with mortgages?
Thanks for the introduction, AJ. I'm Eric Norcott here with AssuranceMortgages.com. Now, as it stands, we're still seeing historically low interest rates in the mortgage space, with variables as low as 1.3% and fixed rates as low as 1.99. Fixed rates have seen a bit of an uptick over the past number of months, and this has been pushed up by increasing bond yields. Bond yields have been pushed up and influenced by the government bond buyback program. That said, we are seeing bond yields settle, and we're expecting that fixed rates are going to stay steady for the next number of months in the near term. However, the long-term forecast in the fixed space is to see increases. Variable rates, which are influenced by the Bank of Canada's overnight lending rate, have been holding steady for some time now. We're seeing the Bank of Canada hold their overnight lending rate at 0.25%, and we expect that to continue on. And most of the banks have prime rate now sitting at 2.45%. Expectation is for this to continue on more of the same for the next year or longer. That's all for now. I'm Eric Norcott, Assurance Mortgages. Bye for now.
Now remember, this inflation is in large part due to the expanding monetary supply. You'll notice that cars, boats, even food has seen increases year over year similar to that of real estate. What this means is that although the big numbers, the hundreds of thousands of new equity, feel and sound great, simultaneously the purchasing power of our dollar is being eroded. Now, in times of inflation, owning hard assets is the only life raft. So although now is a terrific time to cash out of a property, I would caution you that you should keep your money invested in assets. I have plenty of clients that have a lot of cash on the sidelines, and they've watched the purchasing power of their nest egg plummet while prices have been on an upward trajectory. I don't want to make this video about monetary theory, but please, whatever you do, take care to ensure that you're protecting yourself by staying invested in assets that perform well during inflationary times. Things like real estate, precious metal, Bitcoin, even great companies. On the investment front, we are seeing 10% of our sales roughly are for investment. Investors are buying everything from suited properties, multifamily apartment buildings, to resort-style Airbnb properties. Now let's hear from Ezra, our Vantage West property management expert, on what is happening in this rental market.
Over the past 6 months has been very exciting time for investors and their rental properties. Kelowna is one of the fastest growing cities in Canada. StatsCan said between 2019 and 20, our population grew 1.9%, and I wouldn't doubt for this year it's over 2. Due to that growth, rental rates across the board have increased from 10 to 15% and staying strong. This is stimulated by low supply and high demand. It puts our investors in the ideal position to find that great tenant that's going to treat the property like their own. I forecast this healthy market to continue throughout the summer and fall.
As you can see, not nearly enough supply to meet the demand in the rental market either. What's it going to take to reach a sustainable pace? Well, the answer is not more government intervention. It's quite simply supply. Supply, as I've taught many times on this channel, is quantified through what we call the absorption rate. A 4 to 6 month supply of listings is a balanced market. Anything less, and we have a seller's market. Some context, last year, or a little over last year, we were around 6 months worth of inventory. Back in 2009, when things were a buyer's market, at their worst, we had around 18 months worth of inventory. So again, we have 2 months worth of supply, which is why we're seeing bidding wars, which is why prices are escalating the way they are. 2 months of inventory is up slightly from the first quarter, where we had only 1.4 months of inventory. So things are starting to trend in the right direction. The massive month-over-month price gains seem to have slowed down as a result. When we compare the 3 months previously, where prices went up by 10%, and zoom into only the last 1 month, where prices only went up by 1.5%, there does seem to be some easing. 1.5% per month still equals anywhere from 15 to 20% gains year over year, which is still unsustainably high. So is it that people just aren't listing their homes? We've had 3,200 listings come on in the second quarter alone, which is up 50% from the first quarter. So there are definitely more listings coming online. It's just they're all being snapped up quickly and for top dollar. As of the end of June, homes were selling on average for 99.7% of list price. Now, Vantage West listings, on the other hand, sold for 105% on average, so there is a difference between selling and engineering the best outcome. Looking at time on market, average home is taking 34 days to sell in this market. However, most properly priced homes will sell in the first couple of weeks. The 34 days is due to a number of outliers that just won't sell, and they're hanging around for hundreds of days, skewing the average. So with resale listings coming and going so quickly, and affordability becoming the hot topic, we need to look towards the development industry to bring us the much needed affordable supply. There are dozens of notable projects in various stages of development. 2 big launches coming out this month are Aqua and Water Street by the Park, both of which are lifestyle investments, and these 2 projects are likely to sell out this summer. It does appear that our development scene has caught the attention of big city developers, as many are looking to invest in and build a presence here in Kelowna. Now, speaking with my colleagues in development sales, they too are experiencing a massive influx of registrants and buyers coming from the coast. Don't expect to see a glut of condo inventory like we saw back in 2009. These projects seem to be well absorbed. All these major developments will amount to another couple thousand home sales, so the numbers I just quoted you aren't even the full picture. Okay folks, there you have it, a full digest of what's happening in the resale market, the rental market, new development sales, and the mortgage world. I hope you found this tremendously helpful. We at Vantage West look to be your guide and source of real-time real estate intel. Should you have a need or a question, we're standing by to help. If you'd like to see what properties are on the MLS, you can do that from right here on the blog. If you're curious what your home might fetch in this crazy seller's market, you can start that process right here on the blog. Thanks so much for watching, and enjoy what's left of our Okanagan summer.